Who pray with us? Reverend William, that's your ma. But when are you here? Pentecost elder, but when? Christian answer, pray with us. Christian. Your name is Christian, pray with us.
Nice. Okay, let's pray. Let's pray. In the name of the Father, the Son, and the Holy Spirit, Daddy everlasting Father, we commit this session also into thy holy care. We pray that as we are about to begin with us, proceed with us and end with us, so that the end, glory and honor will be given unto thy name. These are many blessings we ask through Jesus Christ our Savior. Amen.
Amen. So these are the adjustments that we are supposed to know. Some of them, you know them already. Adjustment on revenue and the cost of sales. We are looking at agent sales. We are looking at sale or return basis. We are looking at after sale service and support. We are looking at sale and repurchase agreement. Sale and repurchase. These are notes that you often see in your final account to note 1. Goods not for sale, but display only. Then we come to bonus issue. Right issue. Usually right issue, they will tell you that it has been accounted for. Right issue accounted for. The rest of the note would have to do with standards. One note that is always constant, last note, is income tax. That is tax expense. So let's look at these key adjustments. They are very important in the final account. Very, very important. Once you know this, the rest is standards. If you know, you know. If you don't know, you don't know. Standards in the meantime, because sometimes they will frame it in such a way that you have to apply the standard to be able to. So what I have to do is to teach you how to deal with the standard that you should be able to apply. I've given you some past questions and answers. Have you received it?
Yes, sir.
Yes, sir.
All the questions for the past 5 or 6 sittings that have been coming, they are all ACC. And then the questions I've sent you, you can go through yourself and confirm. In fact, I forgot. Someone reminded me on the page, so I had to use that whole day to get that on Thursday or so. So I couldn't get the time to go through it with the ICA one to check which of them have dropped. But I know all for the past sittings, they are always the same questions. So those questions which has dropped, you skip them. Check the past question. Those ones which are there, you skip them. Solve those ones which have not yet dropped. I can't really tell which one will come, but I'm sure it's about Kubashaba. And I think all of them, I managed to add a solution. It's a whole work. I have to spend from the whole daytime and then overnight to be able to do. Because after downloading all of them, you can't get it once. So I have to download it one with the solution, and after that, I have to use a love PDF to match them one before I put all of it. It's a whole work. In the my way now, let's say you don't go through to solve. No question be back. No bow in say, yeah. That is why it means why am I proper with me. So
Very fine.
don't disappoint me. So let's see. Most of them is they are in the book that you have the volume 2. Most of them are in, but without solutions. Okay, let's start with there are some basic ones that I ignored. I don't know whether you know it or should I assume you know the basic ones?
No, please.
Abdul, what is the difference between cash discount and then trade discount that come to allowed and then received? These are basic things that I assume that you know. What is the difference between cash discount and trade discount? 10.
The cash discount is the discount given on cash sales. And then the
cash.
Abdul, I'm listening.
And then the trade discount is the discount given on credit sales.
Trade discount is given on credit sales.
Yes, please.
Cash discount is the discount given for early settlement of debt. And then trade discount is given for making bulk purchases.
Okay. So that is it. So card discount is not only for cash sales, but it's for
payment.
It's for payment within a specified period of time. Trade discount is on bulk purchases. Then that you see that those who usually buy in bulk, because it's too bulk that they can't pay now. You see that most of them will buy on credit, but it does not mean that anyone who buys on credit enjoys a trade discount. No. When you pay, in fact, the card discount is also called early settlement discount. I get in it. The discount that you get when you settle it early. So card discount in itself is a financing. It will be a financial activity. Card discount. Trade discount is an operating activity. Okay. So how do you treat cash discount allowed? Cash discount allowed, trade discount allowed, what it all? Level 1. Hey. It's something that I assume that you know, so you should I didn't even write it. I only said, oh, let me ask you. Yes. Cash discount, it within the same. Trade discount, it within the same.
Discount allowed. Discount is
Abdul. Abdul. Abdul, Papa
Sir,
Police.
sir,
Uncle
please.
Robert, 1 minute.
Who is coming in?
Sir, please, Berwin, trade discount is not accounted for in the finance, is the final account. It's
I said trade discount allowed, cash discount allowed. That's what we are discussing now.
okay, so trade discount is not accounted
Trade
for
discount
at all.
allowed.
Trade discount allowed is
If you
deducted
say
from
trade
sales.
discount, Keke, you've not said anything. Say
Okay.
trade discount allowed.
Okay, trade discount allowed. It's not accounted for. So the total revenue, the total sale price would have been 10,000. Trade discount allowed is 2,000. The 10,000, the 2,000 deducted, and the 8,000 is recognized as net revenue. Nothing happens again. Then when it comes to cash discount, the 10,000, for instance, would have been recorded as revenue, and then the 2,000 expensed, recognized as an expense.
Okay. So the cash discount allowed is just an indirect expense, right? Then the trade discount allowed is a direct expense to sales. So trade discount allowed is deducted from sales. Car discount allowed is treated as part of what? Our expenses.
I told you I'm busy.
It's treated as part of our expenses. You told me you are busy, but you didn't mute your mic. Okay. In the statement, or assuming is in the note. Assuming it's in the note. If it's in the note, what do you do? If it's in the note, what do you do?
If it's in the note, depending on which discount it is, whether it is trade or cash, then you treat it accordingly, just as I have said.
So if it's a trade discount.
If it is a trade discount and we are given the sales value, and this sales value is the listed price, then it means we have to deduct the trade discount from the price before we recognize the revenue.
So what will be the corresponding entry?
So the trade discount doesn't, from my understanding, it doesn't come into the double entry treatment at all.
Okay, I get you. So this is what happens. Once it's in the trial balance, then it means that it will not follow the double entry. All the items in the trial balance, it means that they have already gone through the double entry principle. So you treat them once. But once it's in the note, they need to treat them twice. The trade discount, as you see there, when you deduct it from sales, it means that you are debiting sales. The credit entry is to reduce the debtors figure. That's the truth, is to reduce the debtors figure. So you should take note of that. That's it. Then the cash discount, if it has not been recorded, you know the cash book used to have cash discount there. So to be at the credit side, cash discount allowed to be at the credit side. That one to it means that you have recorded the sales at the gross amount. Once you have recorded at the gross amount, when you credited the sales and debited the cash or bank, which is wrong, you didn't receive all. So you need to go and reduce the cash or bank by that cash discount. These are just elementary ones. I don't think any serious examiner will be interested in examining you on these things. I felt you should know. You know them already. What about return inwards and then return outwards? Yes, by when? By when? Campaign manager, let's go.
So return inwards, you have to reduce, for returning invoice, you reduce sales, and then you reduce what we call debtors value as well. And then return outwards also reduces what we call cost of sales, and then creditors value.
So this one, all this, you mostly see them in the trial balance. That is why you see that it is treated once. But in the note, it means that it has not gone through the day books. You know, we have the return invoice day book. You remember?
Yes.
Return at all day book level 1. Those, you know, these things I don't think is a problem. What about carriage? Carriage invoice and carriage outwards. Which one is added to purchases?
So the carriage invoice.
Yes. Carriage invoice is the cost that invoice is the cost that you incur to bring your purchases into your business premise. But the outwards is the cost that you incur when you distribute your finished product, when you distribute to customers. Those ones are just indirect expense. Why the invoice is the direct expense? I hope you are there. So those ones, it assume that you know. So let me clean them. Or I shouldn't assume certain things.
No, Pastor, you've explained them, so we can move on.
It's good to assume. Agent sales. Agent sales. So on the agent sales, we are asking a question. Please, so do you understand agent sales? It is the sales that you get acting as an agent. Ice foam. You know, ice foam, you only have to get the store yourself, and then they will come and furnish it for you. They will bring you some ice foams. You sell, you take your commission and remit the sales to them. Or I don't know how they do it, but I know they pay them commission. So it's either you send everything at gross, then they will send your commission, or you send net of commission.
That's how they do it. That's how they do it. The latest form, the same thing.
So the people will send a net of their commission, or they send it at gross, then they pay the commission separately.
So they pay the commission separate.
Okay. So apart from those in the foam, should I say foam industry or foam sector? Or
even electronics, they do that.
Samsung, any name?
Say Electrolat, those kind of companies. There are some companies that sell, you know, they can go for Samsung products and other products and sell and get commission on it.
I remember the last time when I was teaching it face to face, students were giving me funny examples. They would tell me Max International, Herbalife. I said, really? Okay. So I accepted it. Once it made the agent says thing, you just accept it. Okay, now there are two types of these agents that will inform the treatment. We are looking at primary. In your exam, once the question is silent, I assume that it's a secondary activity. I hope you are there.
Okay.
So now, we want to know whether you are in business to act as an agent. It means that acting as an agent becomes your primary activity. Do you understand? Or
yes,
you have your own core business that you are doing, and you also act as an agent for another entity as a secondary activity. You understand these two scenarios?
Yes, sir.
That is what I'm going to use to do the entry, so be careful. Okay. Now, the agent is paid a commission, true or false?
So true.
True.
If your core business is to act as an agent, that is, if acting as an agent is your primary activity, then the commission becomes your revenue. The commission is what you recognize as revenue. Do you understand?
Yes, yes.
If it is your secondary activity, then the same commission, you have to treat it as other income. Do you understand?
Yes.
Thank you. Actually, when you feel I'm agent sales means no. We need level 1. I hope you are there.
Yes, sir. We are here.
Okay. So if it's a primary activity, then we are saying that the commission on sales is recognized as revenue. It is a direct revenue. It is a direct revenue. Any recognize any amount payable as receivables. I'm sorry. I'm recognizing any amount payable as payable, right? Okay, recognize any amount payable. We know once I've written payable, you understand. Recognize any amount payable, net of any commission. So now let's see. Total goods sold. That is total sales, right?
Yes, sir.
You have to less the amount that you have remitted. I hope you understand remittance, or it's a big word.
It means you have sent to the person.
Yes.
Or the company.
Yes, the money that you have sent. You understand? So can I with you know? I see the amount that you have remitted. So remittances. But you need to reduce it, or then you take out your commission. Once the goods are sold, you need to take out your commission. Is that not it?
Exactly.
The net is the amount payable. The amount payable is the same, whether it is a primary activity or secondary activity. I hope you are there.
Yes, sir. But sir, a question.
Okay.
The amount payable, is it a revenue? Like if it is paid later on, would it be a revenue to the agent?
The
or
amount payable is a liability.
Yeah, it's a liability, I know. But I'm saying
when
in
you
the cost
pay, you credit your cash. Then you debit your amount payable when you pay.
What I'm asking is that, you know, the amount payable is something that the customers are owing you. But I want to know whether it is the agent who will take that money or he will send it back to the principal, the person who has sent it.
The principal would have to take his money. He doesn't know whether customers are owing you or not. On amount goods 100. When you sell, you get a commission of 10%. So your commission is 10. Also money 90. and you have paid 50 or 40. Do you understand? So if anyone is owing you the agent, you have to recognize it as receivables yourself. But for the principal, you need to recognize amount payable for the principal of 40. You understand?
So it means the remittances is always full. You have to remit the full amount. You can't say someone is owing you, so you will remit the whole amount.
No. You need to, remit what you have received. That means that you are owing your principal. Any customer who is owing you, you also have to recognize it as receivables. You understand?
Okay.
So let's assume in this scenario, the 40 here is with customers. You recognize I'm debt as 40. Then amount payable as a liability to 40. I get in it. Now this all happens. Okay, let me finish with the secondary activity. Most of your exam, almost all your exam to be secondary activity. So take note. If it's a secondary activity, the commission is recognized as an indirect income. And I hope you know indirect income.
Yes, sir.
That is other income, right?
Income. Yeah.
Yes.
So the question will go like, included in revenue is an amount of so and so. So they will include, if the sales is 100, they include the whole 100 as part of the sales figure of the entity. So you have to deduct the 100 from it. I'll be getting it.
Yes.
Yes, sir.
Then
Yes,
the
sir.
commission, you calculate it and then you go and treat it as other income. Then when it comes to the amount payable, you follow the same approach to calculate it. I hope you are there.
Yes.
Okay.
Yes, sir.
So recognize any amount payable. Net commission as a liability.
6 months.
Discipline yourself. Follow same approach.
Say,
What's that?
me who call for no.
I'm not going to make us a microphone. Class, will you permit me? Anybody who would unmute his mic and then we'll be having other conversation outside to disturb us. I just take the person off. I just take the person to waiting list. I'm going to try you. I'm not going to Zoom no super, but on the class. Or it will be too harsh.
So it's too harsh, but they should understand that we are recording, so we need quality.
I'm hard.
Not only that we are recording.
Now be Kasewich.
Not only that we are recording.
I am fine.
But we are also concentrating. Not only that we are recording, at least.
Okay, Yantuaso. Follow same approach. I hope you understand. Follow same approach.
Yes, sir. Yes, sir.
I mean, what I've indicated here as a total goods sold, you deduct remittance, then you deduct your commission. It's very simple.
Sir, please, I can't see the screen. It's the participants that I can see. I don't know whether
Same here.
That is from your
I can
end.
see only participants.
It's from your end.
No, it's how?
No, I can see the screen.
Those who are seeing participants, go to where the pictures are showing and then click on my name, Robert Impossible. Click on my name. When you click on my picture, the screen will show. You've rather turn it so that the screen is rather showing as my picture and my picture is showing as the screen. Just tap on my picture, you see the screen will pop up.
Okay, thank you, sir.
Have you done that?
So I've done that, but I still cannot see.
No. Do you see my face?
Yes, I can see your face.
Okay. So when you see my face, you see that there should be a box. While I'm talking, there should be a box. You see that when I show the screen, there's a box that shows my picture. I get in it.
Yes, sir.
Now that you are seeing my picture, the box is rather showing the screen. Don't you have any small boy, small girl around you?
So let them scroll their screen to the right. They will see the video.
Okay, they are saying I'll scroll it
Let
to
them
the
go to
right.
the right.
Okay.
Do you know how
Okay,
to
yeah,
scroll?
yeah. Okay, yeah, that's it. Thank you.
You have seen it.
Yes, sir. Thank you very much.
All right. Okay.
Hey, so you.
Follow
Please come
sales
again.
approach. So agent sales, you know how to treat it. Obekono, they will not treat, they will tell you that included in sales of what? The sales amount, all the sales amount is for the principal. So your revenue must exclude the sales amount. Note well. Note well. All sales, all revenues must exclude agent sales revenue. Whether it is your primary activity or secondary activity, make sure the sales figure, the sales amount is for the principal. What you have as revenue is the commission. So if it's a primary activity, the commission becomes your direct revenue. If it's a secondary activity, as it will be in your final account, it will become an indirect revenue, which is other income for you. When you snap this, then I take the next. I'm done now. Please, hello, I'm done now.
Okay, sir.
These are the things that I'm talking of. You should understand these things before we pay the questions on final account. Can I go to sale or return basis?
Yes, sir.
Okay. Make sure I don't leave any of the things I've listed though. Now that I'm moving to other pages. Sale or return basis. Is there anyone who works with a manufacturing company? Okay, companies who are into buying and selling. Is there anybody who works with them at their account? Oh, like Malcolm at the supermarket, you are into buying and selling. Oh, baby sir. Is your company into buying and selling? Okay, mama, why advert? You tell us what your company sells, so that we will be able to know about why. Yes, who is talking? Oh, Bawin, where do you work? Berwin. Berwin, where do you work? Oh, Mumwa quantum way.
Sir, I'm not sure anybody works with such company.
So
No, I'm talking of a company who do buying and selling. No, they sell. If your company sells any product, if it's a manufacturing company, do fine.
My company doesn't do buy and sell.
We sell shea butter.
Okay, perfect. You sell shea butter. Madam, you are the account, right? Madam, you are the account, right? Okay. Now, tell us what the software does to the following when you make the sale. What does the software do to the sales?
Yes, sir.
What does the software do to the sales when you sell? Is that what? Madam, what does the software do to the sales? Okay. When you talk of the sale or return basis, they are the sales that are made, but customers have the right to return them within a specified period of time.
Hello, I can hear you.
In accounting, we say that the revenue from such sales is not earned until after the specified date. Should I come again?
Okay.
Yes, come again.
I thought you know these things in level 1. I'm only trying to write the accounting treatment. By the way, you don't understand. Exemption is no good. Or exemption is good.
Sir, exemption is good, Papa.
Yo. And I was showing.
So if you are the exams coordinator, you will not give exemption.
Oh, me buy that. Me Saminya pay exemption cry between.
Oh, what do you say?
That is very unfair.
But chartered financial analyst, no exemption. CFA, no exemption. Eh?
Is it international or Ghana?
It's international. I'm CFA, chartered financial analyst. One of the best professionals you can get in finance. No exemption. Why also I don't know why I pay the Bichanaco.
Hey.
I want to say. I see and watch your public sector. That's so fairly public sector. And now why a master's, why a FR is so fairly FR. But the radio. But it's okay. The exemption also helps students to finish early.
Yeah.
Yeah. Sale or return basis. We are saying that on a sale or return basis, goods sold can be returned at any time within a specified period of time. Within a specified period of time. That is sale or return basis. Then number 2, we are saying that revenue from such sales. From such sales are not recognized or they are not earned after they are not earned until after the specified date. Please permit me, since I'll give you the video, there's no need writing these things. I'll just have to explain. After that, when you get the video, the explanation will be there. What do you think? So that we can move a little bit faster.
Okay, sir.
Okay.
Yeah,
that'll be fine.
Okay.
Agree.
So now let's see. Sale or return basis. Now that you understand. Share better. Hello, what's the name of the company so that the people will come and buy? Please, the name of your company.
Limited. PBC Share Limited. PBC Share Limited.
PBC Share Limited. PBC, is it public?
Yes, it's under
Produce buying
PBC
company.
Limited. Yes.
Oh,
Please.
so it's under Produce Buying Company. I mean, it's under PBC Ghana. Or you just
yes, it's under Produce Buying Company.
Oh, okay. Oh, okay.
Yes, please. PBC Limited, Ghana. Yes, please.
Okay. All right.
It's a subsidiary under PBC. It's a subsidiary.
Okay. Madam, enough of the advert. Now answer the following questions. When you sell share better is share
Yes,
better,
sir.
right? Mm-hmm. What does the software do? The software will debit and credit certain items. When you pick the selling price, or the sale price, where would the software treat the sale price? You see, usually when it comes to sale or return basis, it affects usually those who buy on credit. They are being granted the sale or return basis option. I hope you are there.
Yes, sir.
Because when they buy on credit, they buy in bulk. And sometimes it's not in bulk, but by the nature of the operation. Like those who sell pure water, most of them don't have any money that they will go and buy and sell. Hello.
Yes.
They have these people with these big fridges. They know them. They take their profit and bring the rest to the owners. I hope you understand.
Yeah.
Yes, sir.
So they give them what you call sale or return. What on answer? One farm up to a specified data, they won't take it again. So we are doing this in the books of the owner, the one who has the plenty fridges. Okay, now, madam, sale price, and what does the software do to the sale price? I hope you are done with the consultation with your boss. Now let's see. Madam, or you are not at the account office.
I didn't hear, sorry. Is that?
Are you not at the account office?
Sale price.
What are the software do to the sales price?
Hello?
Yes.
Sales, the credit and then the debit.
They will credit what? Sales, right?
Yes, please.
And then they will debit which one? Madam, they will debit which one?
Debtors.
Debtors, right? Is that not it?
Yes, sir.
Now, what about the cost? The cost of the product? How the software treat it? Adam, how the software treat it? Quick.
So, we are not using software. We do the entry manually, then we send it to the head office, and they'll use the software.
Okay. So you do the
Can you
entry,
hear me?
I mean manually. It means that you don't even
I
prepare
said
account at your end.
No, we don't prepare accounts. So, like, you use Excel to do it, then we'll forward it to the head office, then they'll do.
Oh, so you don't even know how the profit is calculated. Madam.
No,
Madam, you don't even know how the
at the end
profit
of
is
the year,
calculated.
when they finish preparing, or monthly, when they finish preparing, they'll send it to yes.
There's a madam and you know so can't say. Or you know sad.
Oh, that be
Answer me how.
Questions none was.
Okay, now you share.
Okay,
Okay, see next. Those using software. How the software treat the cost? Quick. Please, someone is asking those who took the picture of the agencies, kindly send it on the page for them.
The software will debit cost of sales and credit inventory.
Thank you. Sale has been made. So they are going to reduce what? The inventory. Is that not it?
Yes.
Then they will debit what?
Cost of sales.
Cost of sales. Now, in a question, they will tell you that included in revenue is an amount of 8 million of goods sold on sale or return basis. Hello.
Hi, we are here.
Then they'll give you the markup and margin thing, which I know you don't have problem with that. Markup, margin. You have to know the sales and then the cost of what? Sales. Okay, now. It tells you that this is what they have done. Once they have included it in revenue, this is the treatment they have what? Made. I getting it? So the question will tell you that they have made this wrong treatment, which you must know. Wrong treatment, as in the sale must not be recognized as revenue until after the specified date. I hope you are there. So long as within the specified date, they have treated it as sales and those things, then it is wrong. The goods must be treated as though it has not been sold and is there.
Yes, sir.
We will therefore treat the goods as just a change, a mere change in location of what? The goods. So we have to reverse all the entry, the 4. So we'll go and then we debit what?
Sales.
We credit what?
Debtors.
With what? The selling price, right?
Yes.
Then we do what?
We debit inventory.
We debit inventory.
And we credit cost of sales.
With the what?
The cost price.
cost. Do you understand?
Yes, sir.
What if you have only statement of financial position? If you are adjusting it to profit, then the difference between the sales and the cost of sales is going to give you that profit. Do you agree with me?
Yes.
Yeah. So as simple as that. What the answer, Sano? Go and debit sales mean that you should deduct it from profit. Then credit cost of sales means that you should add it to profit. It is going to adjust itself. That's all. It's very simple and straightforward. So the question will tell you that this is the treatment they have made. So you have to reverse it. Reverse that. Do you understand sale or return basis?
Yeah, I understand it now.
And yet I don't need any won't be as out.
And Uncle Robert, it's like it's only one person talking. Oh. I'm not sure the others do understand. The class is combined with the special and then the regular. Some are yet to write it, although it is, let's say, it's a revision something, but then at least we ought to grasp the concept and then the basis.
I think he's asking a general question. So if you don't understand, you just say it.
Yes, I do understand.
Yeah,
exactly.
It's like you say fast. Yes.
Some of us are veterans, so if you don't say you don't understand, we will speak for you.
Exactly. So if you don't understand, you just say it.
That is why I'm drawing his attention that the class is made up of two groups, the special and then the regular. Thank you.
Unless
but he's also asking whether they understand. So what else should he do now?
Yeah, so if you say yes, we understand, but you don't say no, Robert cannot do anything.
Please, the question doesn't go to you. Thank you. It goes to Uncle Robert. Thanks a lot.
There was a hand up. Priscilla, ask your question.
Robert, I'm okay for now.
Oh, Priscilla, don't mind them, man. Ask your question. Feel free.
I'm okay for now.
You're okay for now. Let us say in future, you know, be okay.
Probably.
Oh, then, in fact, I want you to be okay in the future. So ask your question.
Please, let's continue. I'm okay.
Are you sure?
Yeah.
Don't do outside gentility home cry.
And Robert, I have a question.
Okay.
So with the wrong treatment, yes, with the wrong treatment, that was the initial treatment that was made, which is wrong because the skill was made on a return basis.
Yes, they have treated it as though they have earned the revenue.
As a normal sales. Oh, okay.
As though they have earned the revenue.
In
actual sense, they have not earned the revenue because the sales is still within the specified period. The customers still have the right to return those goods.
So it means it will be stated in the question that the sales is within, still within the specified period.
They are going to.
But maybe you need to slow down a little for us.
It would that I'm moving. I thought I've slowed down.
Fast. No, you are moving very fast. Anyway, let's go on.
Let's continue.
Sir, please, a question.
Thank you.
Yes.
A question, sir.
Yes, sir.
Sir, the sale and return basis or return basis. You said it is normally for credit sales. So what about a situation where a customer buys a product which is cash sales, but this time around the person has been given the condition that he can return the goods at a certain period in time? Is it also sale and return basis?
So the same way we credit debtors. I get it.
Credit cash.
Yes, you credit cash.
Okay.
You have received the cash. You treat the cash as if it has not been received. I get it.
Okay,
I get it. But
yes,
see this one. The cash, in actual sense, the cash has been received. I get it. The cash book is such a way that once cash has been received, you can't assume that it has not been received. Are we getting it? So the correct treatment is that instead of crediting cash, you need to go and credit liability.
Okay. And why? I understand the reason.
It means that you are owing the person.
Okay.
You see that this one that we are crediting the debtors, what it means is that we are saying the person doesn't owe us.
Yes.
I get it because it's on credit. So once the person can return the goods or the goods to bring on the account. But once the person has paid cash, it means that the goods to bring also return the cash on Monday. Yes, sir.
Exactly.
So it means that you are owing the person now until after the specified date.
Okay.
So instead of crediting cash, no. Once cash has been received, it must be reflected in the cash book and the bank account, and there's nothing you can do. Rather, you need to credit liability. You are owing the person. But most of the time, you see it as they'll tell you credit sales, meaning debtors.
Okay.
It's a good question. Any other? You understand still or return base, right?
Yes, sir.
What is the next one that I wrote? Is sale and repurchase agreement? Okay, let's go and look at that.
The next one is after sales service and support.
After sales service, sir. After sales service.
Okay. So service and support. We crumble the Nisa Mekasa or maybe. But the man can maybe Anna. But this one that you understand.
So we understand the meaning. So maybe there is a tricky part of accounting treatment. So let us.
Tricky bien.
Oh, okay.
Tricky bien na o pesa. Tricky bien maybe. Do you remember when I was teaching the IFRS 15? I explained this after sales service as one of the performance, separate performance obligation. Do you remember?
Yeah. Yes, sir.
I told you that when we go to the revenue recognition, I said, if the after sales service, like the staff training, for instance, if it's for 1 year, then you need to allocate the profit within 1 year. Is that not it?
Yes, sir. I think you used it as an example.
Good.
The Cine software.
Good. If it's maintenance, then that maintenance, you need to split over the period of the maintenance. Is that not it? Now, what the standard is trying to say is that whenever you have an after-sales service and support, an amount equivalent to the cost plus profit should be deferred if the after-sales service is not delivered at a point in time. Do you understand?
Sir, but if he says an amount, is it to our discretion, the amount to set aside? Do we do it on our own discretion? Or the standard specifies the amount?
Okay. Now, sales value 3,000. And they'll do that included in the sales is an amount received. They will not tell you as a fee. You should know that it's a fee. Hello.
Hi.
They will tell you that included in the sales revenue is 600 cedis. An amount related to after sales service and support. I hope you are there.
Okay.
You should know that this 600 that they are talking about is a fee. It includes what? Profit. Once it is included in sales, it means it includes profit. Do you understand?
Yes, sir.
So assuming that after sales service and support is for 4 years, this is what you do. You divide this by 4. You get 150 every year, right?
Yes.
So in the current year, you are supposed to recognize only 150. Now my question is the 150 going to be an indirect revenue or direct revenue?
So it's indirect.
It's direct. You are in business to sell goods and to provide after sales service for your goods. Is that not it?
Okay.
Is that not the reason why you are in business?
Yes.
Yes. So it is a primary activity. Because of that, the 3,000 you say minus 450. Do you agree why it is minus 450?
Yes, because we have not actually done that. Yeah.
You can say 3,000 minus 600 plus 150. You agree?
Exactly.
The 450, which is for the remaining 3 years, must be deferred. If you are deferring it, it means you have received revenue in advance. Do you understand?
Yes, sir. So
it's a liability.
Yes, but would you split it into current and non-current liability?
Yeah, First, I'm saying that the 150, the 150 is what must be treated as revenue. The remaining 450, you take it out and then you defer it as a liability. Now, the liability to you ask how much will be transferred the next year. The amount that will be transferred the next year should be treated as what? As a current liability. Then the amount beyond 1 year is treated as what? Non-current liability. Hallelujah.
Amen.
Honorable, I hope you understand.
Yeah, it's fine.
So I need not to write anything.
Oh, just a little, maybe for future reference.
Please
write a little.
We should all be responding so that the class looks like everybody is participating.
Yes,
yeah, it will be like one
but
person is talking.
Relax,
especially the ladies, they don't like talking. Oh, Charlie, you need to pay this additional money. You see the ladies who start talking. Oh, say why?
But Uncle Robert, the response will tell you that people are not really getting it. I don't know, but then I think that is the feedback should communicate.
I'm telling you, sometimes too, that one too will be wrong. Sometimes people don't talk.
Anyway, just an assumption.
Sometimes people don't talk when they understand. So I keep asking, do you understand? Do you understand?
Maybe the question should be reframed. Do you have any question?
Okay. Marty. There's a difference between do you have any question and do you understand? If I ask, do you have any question, you tell me that as you go through the whole show, I'll not mind you. That's not a question.
Yeah, of course.
If I ask, do you understand?
Yeah, then the person would ask.
Once I say that, do you understand? And you say no. Then maybe I may want to go through everything again.
Anyway.
Those things. But let's move on.
That's fine. Thank you.
After sales service and support, there's the reason why I'm taking these things small. Yes, I feel maybe do final account now. Or I deal with the never so much. So we do I miss you student with the okay. So after sales service and support, 1. For the meaning that you understand, right? That's a service and support the entity gives to its customers after sale. How do you understand?
Yes, please.
I mean the meaning of it. You understand the meaning. The meaning
Yes,
of that. Okay. This one cry. Let me draw. I like drawing. Okay. So, how long would this be delivered? How long would this be performed or delivered? Is it at a point in time or over time? Up to this point, do we understand?
Yes, sir.
Misha said, do you have any question?
No, please.
Okay. Now, if it is at a point in time, it means that recognize the total fee as a revenue. Once it is at a point in time, then once you deliver, you recognize all. But if it must be recognized over time, if it will be delivered or performed over time, then one, this revenue, I mean direct revenue, very important statement. Recognize the fee over time. The fee for the current year is treated as what?
Revenue.
Direct
revenue.
Direct revenue.
Right.
Yes, sir.
Then fees for subsequent or future years must be deferred. That is recognized as what? Current as liability. It means recognized as what? Liability. Split into current and what? Non-current liability. The current is the amount to be transferred for the next year, or the amount to be recognized. The amount to be recognized as revenue. The amount to be recognized as revenue, as direct revenue for the next year. Non-current liability. We are looking at the amount to be recognized as direct revenue beyond the underlying word is what? Beyond the underlying word is what? Beyond 1 year. Did you understand? Did you have a question? I'm saying kind of sad. Did you have a question? Just a minute, it will be sharp, then you take a shot. Yeah. I hope it is well explained.
Yes, sir.
Yo.
Yes, sir.
The info question that you be bring na as a yo la. The way people are responding, and I'm the cash flow count that by some papa. And that's the more besi. Marana, man,
We are fine.
So we should move on.
Yes.
The next one is what? I wanted to send a video, but we will send a video and catch the issue. Quebec is a special. Oh, the next one heading.
Sale and repurchase agreement.
Sale and repurchase agreement.
Sale and repurchase agreement. Assam another one. Tell us again. The question will tell you that, oh, so and so sold goods to so and so. Let's say Wosoless sold goods to Woso. I hope you understand Woso.
No.
No, sir.
You don't know Woso company and Wosoless company?
No, sir.
Even a gentleman, you don't know Woso.
No.
No, sir.
And you don't know Wosoless too.
Yeah.
This thing. This.
They want
You remember? Let me go off. Let me pause there. So, Wosoless sold 40,000 worth of goods, 40,000 million worth of goods to Woso. To who? Woso. Okay. Now, the agreement is that after 3 years, Wosoless will come and buy back the goods for an amount of 48,000. This is how the question will be framed. Included in sales is an amount of so blah. So they will tell you that when they say included in sales, it means that they have treated it as sales, and all other corresponding entries that has to do with sales recording has been done. So if you think it's wrong, you have to go and reverse them. Do you understand?
Yes, sir.
Okay, so let's see. They will record it as sales, which is wrong. So let's go there. So wrong treatment as sales. Then on ending, they will credit sales.
And debit loan.
They will debit cash, right?
Yes, sir.
Someone pays cash,
Yeah.
So usually cash, they will receive cash. With what? The selling price, not be so.
Selling price.
Then they will go and credit the inventory. Is that not it?
Yes, sir.
Then they will debit cost of sales.
Cost of sales.
With the cost. Do you agree?
Yes.
We are saying no, 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 no. In accounting, we say this is a big no. In accounting, we say that the sale and repurchase agreement is just a loan that you have taken using your inventory or the goods as a collateral security. Therefore, the difference between the sale price and the repurchase amount will be regarded as interest and split or spread over the period of the sale and repurchase agreement. Do you understand?
Okay. Okay.
In accounting, in substance, you know, we are using IFRS 15 came in because the previous one was based on rules. It was rule based. Now we are looking at the principle based. By principle, substantially, it is a loan that you have taken and you are using your goods as a collateral security. So we are going to treat the inventory as just a mere change in location of what? The inventory. The treatment will treat. So let's go. So the sales, you need to write the sales off. So we debit the sales, right?
Yes, sir.
Then we credit the loan. You said treat it as though you're going to take on a loan. Do you understand?
Yes, sir.
Okay. Secret. Secret be what has I'm about 23. Yes.
In reality, does this kind of transaction normally happen?
In reality?
Yeah.
Why are you asking? Why won't it happen?
I find it difficult.
Practical consideration.
Yeah, but I find it difficult to see an example of such a situation.
Why?
Because the way we are treating it, it looks like the person will definitely come and buy back the thing.
That's why there's an agreement. It is compulsory.
Okay.
The person is obliged to come and buy it.
Okay.
Oh, I mean, in practice, it happens so. It really, 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 really happens. Maybe in our part of the world, okay. Now, the inventory, you treat it as if it has not been sold, right?
Yes, sir. Debit inventory.
Credit cost of what? About when we fish one. Okoye campaign. Let's continue. After this, you are not done. You are supposed to come and treat the interest. I hope you are there.
Yes, sir.
Sometimes they will give you an interest rate. Sometimes they'll give you the repurchase price. Calculated using interest rate given or the difference between the difference between what and what?
The difference between the price and the repurchase agreement.
Repurchase price and repurchase agreement. And so what's your kind?
No, sir, I said the sale price and the repurchase agreement.
Yes. So the difference is the interest. Is that the interest will only be paid. You see, they are going to pay a repurchased amount. I hope you are there.
Yes.
The repurchase amount that they are going to pay must include the interest. It's not like every year they will pay the interest. No. Take this asset, put it down. After 3 years, I'll come and buy it. After 3 years, whatever I'm paying for, I pay for all. Every year, I'm not supposed to pay you anything. I hope you are there.
Yes, sir.
So this what is done. The interest is debited to P&L as finance cost. Then we credit it to the loan liability. So if the loan liability is treated as non-current liability because it will mature after 1 year, then it will be added as such. So you credit the loan liability. That's it. You don't say interest payable. Once you say interest payable as a current liability, then you are saying that next year they are supposed to pay the interest, which is not true, which is not the case. It will balance all right, but technically you are wrong. Errors that do not affect the agreement or the trial balance. Do you remember that?
Yes, sir.
Okay. Any question? But when are you there? Any question?
No question.
So you won't ask me questions. Please, what's the next one that I wrote?
Uncle Robert.
Yes.
Sorry. So can there be an instance where the purchase amount will be the same as the sales price, where there wouldn't be any interest on the loan?
In this scenario, in that sense, it wouldn't make practical sense. For the one holding the inventory may also want to earn some profit on it.
Okay. Thank you.
Welcome. Any other?
Hello, sir.
Okay.
Hello, sir.
Yes, sir.
Can there be a discount on the repurchase amount? And if yes, how do you treat it?
Oh, usually you will see those discounting. But if it comes in, don't forget you are treating it in the books of the entity. I get in it. You are supposed to pay amount. You have been given a discount. It will be a form of discount that you have received. Are we getting it? Hello.
Yes, sir. Yes, sir. I'm getting it.
You are supposed to pay the repurchased amount. They've given you a discount. So the discount must reduce how much you are paying. Is that not it?
That is true.
Hello.
Hello, yeah, I'm responding. That is true.
So it doesn't really happen that way, but if it happens, you are supposed to reduce whatever amount that you are supposed to pay. It's going to reduce your loan liability there. That's all. But you usually don't have that because it's an agreement that if it's a discount, it means that the difference between the repurchase price and then the sales, the repurchase price itself is the reduced amount. I hope you are there.
Yeah.
Assuming it's supposed to be the price is 40 and the repurchase price is let's say 100. If you want to give a discount of let's say 10 cedis, then it should be between 40 and 90. I hope you are there.
That is correct.
That's all. Eunice Pobi.
Yes, sir. So please, the asset that is sold to the other party, is it sold at its fair value or
it is sold at
the price is determined?
It is sold at the sale price determined by the entity.
Okay.
Price determined by an entity. But you see, at first, it used to be there. When you go to these villages, okay, some of them have what they call sikatam. Do you understand sikatam? I don't know how to say it in English. So. I don't say golden cloth, but they call it sikatam. How do you say it in English? There are certain cloths that we call them money. Omufimi.
So we don't know. We don't know.
But we are not sure of what you are talking about.
I'm saying that in the village, okay, there are some of the cloths. They have added money to the name of the cloth. Your friend knows sikatam, like money cloth. Like it's very expensive. So in the village, assuming somebody needs money to pay the world school fees, they can always take that cloth, go and give it to somebody who they want to take money from, so that when they pay the money, then they take the cloth. I get in it. And usually they will go with the price that, okay, I need 1 million to pay my world school fees. After 6 months, I'll come and pay you and I'll pay 1.2. Then they give the cloth to the person that when they come and pay, then they take the cloth. As if they have sold they have sold the goods, the cloth to the person. It is not so. Yes. We see the cloth as a collateral security. Yeah. You have taken a loan and the cloth is given as a collateral security.
Yeah.
Honorable John, do you have any example in the banking sector?
No, but I think the nearest...
people sell products to you?
No, I think the nearest example is what we call safe custody.
Okay.
So whatever they consider to be to be precious to them, they'll bring in for safe custody and we charge them. But I don't think that's a good example for this discussion.
Okay.
Yeah.
Okay. So you people have been taking some gold there.
Yeah, gold and some kind of.
And you charge them.
Yeah, that's for safe custody.
But don't you trade in those things?
No, for now, no.
Yeah.
So
a person brings a good and the bank will not trade in the good for the person.
No.
So the good will just be there.
Yeah, self custody. So
I see.
Yes, but it's not only gold. It can be your document, your valuable document that maybe you have.
I'm only asking.
Yeah.
I'm only asking very good at least also in the Impanonkonya. But you'll be charging the person.
You charge the person.
Yeah, that's safe custody. So we charge you for keeping it safe for you.
That's a service the bank is providing for the customer.
Yes.
Yeah. But on the part of good, at least you should have paid the customer to something or more short someone but you trade in it.
Oh yeah. The two. We don't trade it. No. Yeah, the two. Ask them when you want to. Ask them when you want to come.
If they trade in it and then you are coming for it, how do they get it for you? Because probably the person wants the gold. He doesn't want money.
Yeah.
So how would you get it for the person?
And there was
serious. And some of these customers want to announce they can just come that they will just want to have a look at them. So we have to go and bring the items, then they will check and then they sign whatever they want to sign and then leave them again.
Okay.
So what happens if the item get missing?
Hey, no. They will not get missing.
Robbed or something. The bank get robbed. Are you going to pay back the customer?
Yes, per the agreement. But everything that is in service is insured.
Oh, okay.
So it's part of the whatever we are keeping in the safe.
Then Honorable John, I think I have to bring my SS certificate and other certificate for you to keep it.
No problem, you bring them.
SS certificate,
who do you there? Who do you there? SS certificate.
Now me am for Kwame so Korea.
Certificate when you lost.
Don't worry, we'll get it for you.
After that, I'll go and steal it. Then I'll charge them.
Sir, we'll investigate. When we realize you are the one who came for it, then we arrest you.
I see. They say arrest them there. Honorable policeman. So interest. The difference between the repurchase price and the sale price is interest. You have to split. The interest must be split over the life of the agreement. I think I didn't write that one. Note well. The interest must be split or must be allocated over the life of the agreement or over the agreement period. What's the next one? Please, so any question here?
It's goods. It's goods not for sale, but display.
I have a question, please.
Please ask.
Robert, so if the interest is split or allocated over the agreement period, it means we would have several. Let's say like the agreement period is for 3 years. Would have the interest for 3 years. It means which the current year will be recognized in the P&L, and then the subsequent 2 years as current and non-current liabilities.
No, there's nothing like current liability. The interest payable is added to the loan.
Okay, the remaining is added to the loan.
Yes. If the loan is a kind liability, then they together become a kind liability. You add it.
Okay.
Because the person will not be paying interest every year. Who wait at the end of the maturity, you come and pay the lump.
Okay. Together with the interest. Okay.
Yes.
So why are you then splitting it over the agreed period if the person is paying at the end of the maturity?
Yes, we are saying that the interest is earned over the period. Just that the payment is made at the end of the period.
Okay, so it means the total interest will be sent to debited to the P&L and then credited to the loan liability.
It's not the total interest. It's the yearly interest. As and when the years pass by, you calculate the interest and then you add up.
So how about the subsequent ones?
The subsequent ones, you do the same thing.
So let's say the agreement is for 3 years, starting this year, and we are preparing accounts for this year. How about the next 2 years? How are we going to treat that?
The next 2 years, you are not supposed to treat the interest because you see, one mistake that you do is that the interest is explicit. The interest is explicit. You have not incurred the interest. Have you incurred any interest cost? No. It is only when the years passes by that you incur the interest cost. I get it.
Okay. Yes. Okay, thank you.
Okay.
Sir, sir, I have a question.
Yes.
Okay, sir. So with regards to the same issue he's talking about, so for the first year, assuming it's for 3 years, and we are doing it for the first year, the interest for the 3, assuming it's 3,000, will be we have to pay 1,000 as interest. Are we not treating it in the P&L?
Come again, let me get you.
Yes. I said with regards to the same question my brother was asking. The interest, if it is for 3 years, it means if we are at the end of the first year, and maybe the interest is 3,000, the total interest is 3,000, it means 1,000 will be due.
Yes.
So how are we going to treat? Yes, but you are saying we are treating all at the end of the 3rd year. How are we going to treat the 1,000 that is due?
The scenario I gave is 4 million and then 4.8 million, right?
Yes.
Let me change it and then see how I want to use 3 years. I thought standing for long hours is the problem, but sitting for long hours too, not doing is the major problem.
Yes, it's even dangerous.
And because in the face-to-face there, I used to stand for long hours, but now I sit. Sometimes I'll off my audio, I'll off my video because I'll be standing.
You just need to balance it. That's all. Everything is motivation.
Okay. Now let's see. Let's say this and then 46,000. So the interest will be 6,000, right?
Yeah.
Assuming it's for 3 years, every year is 2,000, right?
Yeah.
Yes, sir.
Okay. So this is what happens. P&L. Finance cost. Year 1, year 2, year 3. 2,000. You understand?
Yes, sir.
Yes.
Statement of financial position. Current liability, non-current liability. Now the loan amount is 40,000. Do you agree?
Yes.
And the interest is 6,000. But at the end of year 1, the interest of 2,000 was due. So it will be 40,000 plus 2,000 for 42,000. Do you agree?
Yes.
Okay.
Yes, sir.
at the end of year 2, another 2,000 will be due, right?
Yeah.
So making it 44,000 as current liability. Do you agree?
Yes.
The rest will be negative. Do you agree? By the time you get to year 3, you would have paid. Is that not it?
Mm.
Do you understand what I've just done?
Yes,
No,
sir.
sir. No, sir. No, sir. The year 2, the current liability, you added 4,000 to, so it means 4,000 of the interest is still outstanding to be paid.
At the end of year 2, yes. At the end of year 2, you have incurred 2,000 in year 1, 2,000 in year 2. So when you add this 4,000.
Yes. So let's say, imagine we are preparing only the financial statement for year 1. How would the remaining 4,000 be treated? Will it come?
I said, oh, Radhi. T. Now, Sina, ukwaji loan banka. Beba. So ukwaji loan or banka. Let's say we current year. Oh, baby, ukwaji loan 5 years. First year, so bank will charge interest.
Yes.
How will you treat the interest?
It will be added to the part of the loan I'll be paying.
No. I mean, how will you treat the interest? You know that once the interest has been paid, you go and credit your cash and debit your P&L as an expense, right?
Yes, sure.
Is that not it?
Yes.
Do you treat the interest for the remaining 4 years?
You don't, because you've not incurred it yet.
Yes. So that's what I'm trying to say.
Okay.
Once you are at the end of year 1, the interest for year 2, year 3 has not yet been incurred.
Hello, sir.
Yes. Abdul, do you understand what I'm trying to say?
Yeah, I do. I do now.
Okay.
Thank you.
Yeah, honorable.
Sir, there's of financial position. The year 2, I don't really understand why it should be 44,000, because if the loan is 46,000 and you paid 42,000 year 1, then year 2 you're not going to pay 44,000. Oh.
Me say year 1 loan unto you. Second of the month you will pay at the end of the year 3.
Okay, sir. It's okay. I get it now.
Yes. If you have the money, like you go and sell your asset for that money, you will pay only at the end of year 3. So the 42,000 is a liability. Any other? I hope you have taken the snapshot. Let me move on to the next one. Okay. Can we now move on?
Yes, sir.
These things takes time. Okay, so now let's look at
what next one. Goods not for sale,
but display only.
Goods not for sale but displayed only. What is it? What is it?
Is it like some monument, or how do they call it? Those like valuables which are not for sale, but just for people to admire it.
I think it's an invitation to treat, something for you to see, to buy the same thing. So those ones are in the showroom.
But this one, they are saying it's not even for sale. So you cannot even.
Yes, for display only.
Yeah, so it's just like maybe some, let's say when you go to the museum, what is there, you can just see it, but you can't buy it. Or
I don't think so. I don't think so.
Let's allow Seth to talk. Let's allow him to
talk.
Let's allow
Robert to talk. I don't think so. I don't think so. Episode or TV show. I don't think so.
I agree with the person who is saying it is only for display. It's not that the item is not being sold. If it is finished in the stock, the item will still be displayed to show that they might bring the stock later.
Well, that is what we think. Uncle Robert.
Okay. I'm trying to get a perfect example. Okay, Honorable John.
Yes, sir.
Let me use the Malcolm example. After that, check your bank and see whether you have a banking example like that.
Okay.
When you go to Malcolm,
okay,
there are certain products there that are not sold by Malcolm. The last time I went to the one at Balishi, I saw those with Nivea products.
Okay.
They were in the Malcolm shop there. So if you need those products, they have those packages. They meet you, they explain to you, and then if you need a product, they sell it to you. That money does not go to Malcolm, but their products are displayed at the Malcolm shop. So they will pay a commission or a fee to Malcolm, and then use their premise for only display. Malcolm does not take part of their negotiation in terms of their sale. They have their own agents there to sell the product. How we are there?
Yeah.
Okay.
As we are there at one time, somebody can say that, oh, students are there, so I want to come and sell laptop there. So once the person comes with a representative to sell the product, and then I will charge the person for using the premises to sell the product. It tells you that good, even though when I am counting the inventory of one touch, it will be part because I keep it. When they are doing stock count, it will be part. But it belongs to someone. You don't take part in the sale of that product as well. I hope you're getting it.
Yeah.
But once I am the one who sells the product, then it becomes an agent sale.
Okay.
You understand?
Yeah.
So let's see.
Okay, I think
at the bank, do you sell any product on behalf of do you display any product on behalf of others, product that you don't have the right to sell them, but those other people are there to talk to customers to buy?
Currently, I think we are doing it with Star Assurance, which is banker assurance.
Okay.
They call it home call insurance or something like that.
Okay.
So we have their reps or agents in almost all our branches. So they sell the products to our customers or our prospective customers.
Okay.
As and when the customers come, they try to sell if they buy into it.
Then GCB will charge them some small fee.
Exactly that.
That's all. That is so. The insurance is something that you cannot count as a form of inventory, but assuming it's not insurance, but it's a product.
Yeah.
And you know, nowadays stock count are being outsourced. Are you aware?
Yes.
Are you aware? Nowadays,
have companies that are just specialized in stock count.
How did you have companies that are just specialized in stock count? So this this what happens.
You said outsourced.
Yes. You know, this what happens. As part of controls, you know, usually when you are doing a stock and the auditor has to be there, right?
Yes, sir.
Sometimes it is not feasible for the auditors to be there throughout. You know, during 31st night, most auditors don't go to church. Do you understand? What do?
they are busy doing easy stock count and then making sure things are in order.
Senior, please, you know, why and what they do. Honorable John, I hope you understand what they do. They don't go to test first now because of the banks. Some of the banks, they count their money early, so you are able to
it's
do
true.
it. Some of them to and more 10 p.m., 11, 12 on starting time.
Yeah, they call it cash count.
Good.
True.
That cash count, they are supposed to be there. So most auditors, the first night, they be settled first night or the other. Now I'm telling you that now stock count is being outsourced as part of controls, because internal people do the stock count, and once you do a recount, there are differences. Imagine telling the storekeeper to go and do a stock count. I hope you understand.
Yeah.
Yes, sir.
Yes,
sir.
So now companies with branches, some of them, what they do is that they will just transfer them. You don't even know who is coming to count who and what. So when they come, they count everything that is there. So during stock count, you are supposed to count everything that is in the premise. Whether it is for you or not, or you count everything. Everything should be counted. So now that everything is counted, if they treat those goods as part of the goods for the entity, then you have to go and reverse it. I don't know whether you get me. If they treat it as part of your inventory, it means that they are going to debit the inventory and credit cost of sales. True or false?
True.
True.
You have to go and reverse it by crediting the inventory and then debiting what? Cost of sales, to reverse it. Because that inventory is not for you. Do you understand what we are doing?
Yes.
So,
yes, sir.
Yes, sir.
If it has been treated as part of inventory, then debit cost of sales and then credit what? Inventory. The inventory, I mean closing inventory, right? Please, what's the next one? But let me ask you.
Okay.
Let me ask you something for subsequently. Maybe I can do it better for those who come next sitting. Do you think what I'm teaching right now, if I sent you a video, you would have understood it better?
Not better per se, because people still have questions to ask.
Okay.
I think I also suggest that we do that one on the virtual one.
On the virtual one, asking
like this.
Like this.
Yes.
Oh, okay. Because I almost did a video for you. Almost. Then upon a second thought, I said, no, these things, we need it in the final account. So if I get to the final account and maybe you didn't understand the videos, it's going to be cost 90. Okay. Thank you for that response. What's the next one?
Bonus issue.
In exams, your question. One or church or mother and son. The person should mention the full name. Bonus issue. You know bonus issue and the IS 39 special, right? Okay. Whenever there's bonus issue, the question will tell you that it has not been treated. When they say that it has been treated, it wouldn't make sense. They will always tell you that it has not been treated. Where it has. Where it has not been treated, thank God. Where it has not been treated, thank God. Accounting entries. You are supposed to debit. You see, whenever there's a bonus issue, an amount equal to the fair value of the shares, fair value of the bonus share is transferred from the share deals account to the share capital account to make up. So we go and then we debit the share deals is according to the Companies Act. Share deals are, if there's no money there, you come to income surplus. That is in Ghana. What you use. Others use capital surplus. Okay. Then we credit share capital. An amount equal to fair value of the bonus shares. Fair value of the bonus or shares. Is are you there? If you don't have the fair value,
yes,
then use the nominal value. If not, use the nominal value. We are done. Do you understand?
Yes.
We halfway there. You're only making a transfer within equity. Transfer from the share deals or income surplus to the share capital. And the amount to be transferred should be in relation to what? To the bonus shares, the fair value of the bonus shares. If you don't get a fair value, use the carrying amount. Very simple. Any question? Is it left with the last one?
No, last two.
Okay. Yeah, the next one.
Right issue accounted for.
Right issue accounted for.
Yes, please.
Uncle Robert.
Yes.
So this treatment is where it has not been treated.
Which always all the final accounts will tell you this.
Okay. Okay, thank you.
If it has already been treated, the question doesn't make sense. Because
Okay.
there's no way you can ascertain the bonus issue out. I get in it. It really makes
Sure.
sense. If it has been treated, then it means that they have to give you the bonus shares give you the amount, then you calculate and then go and take it. Then go and take it out to get the balance of for it. Now after that, you add it back. There's no trick in it, it's raw. But whenever you have right issue, then every good question will tell you that the right issue has already been accounted for. Oh, so when did they say, now I should repeat that? I will not. I will not. Let me check the person. Should I take the person to waiting list?
Sir, you are a good person to do that.
Yes.
Maybe you can just
find or that one or showballs or yet I'm actually no boss Abraham. I feel what to me. Just in the nearby and also just obey me to the mic. Try it again. Or I'll be able to do back. It's very important too. No tonight about fun. Nobody will teach you fun account like I'm doing, you know. So take advantage of it. Okay. Let's look at right issue. Right issue, they will tell you that the right issue has already been accounted for. They will say during the year, One Touch Limited accounted for a right issue of this for this at a price of, let's say, 2 cedis. Please, are you there?
Yes.
Yes, sir.
Yes. One feminine.
We were responding.
Okay. I'm saying that the exam question will tell you that it has already been accounted for. So let's look at that. We are here for results. Whenever there's right issue, be sure you are going to get 11 to 14 ticks for free. 11 to 14. There are certain notes that you should master before you go there. You master them. Where the right issue has already been accounted for. Please, I want to finish with this, then you can take some few minutes, then we solve the question. Say, I know it has been boring ever since you came. Ever since you came back, it has been boring. Oh?
Yeah, sort of.
It's very true, but
so when the right issue has already been accounted for, what do we do? Tin you. Calculate the right shares. Using the terms after the right issue. So, for example, if this 1 for 4, that is before. After will be 1 for 5. Do you agree? Do you agree with me?
Yes, sir.
Yes, sir.
If it is 2 for 7,
2 for 9. 2 for 9.
Three for 5.
Is what?
3 for 5.
3 for 5.
3 for 5. So I can end here, right?
Yes, sir.
You understand these terms after the right issue? Do you understand the figure that you were giving me 2 for 9? You are using this formula.
Yes,
2
No,
over,
please.
2 over 7 plus 2. I hope you remember.
Yes, earnings per share.
That thing, anybody issue. That thing is assuming the total number of shares is only 4. Then you give a right share of 1. Then after the right issue, the total number of shares will be how much? 5. So the aftermath terms will be 1 for 5. I hope you get it.
Yes, please.
Yes, please. Yes, please.
Yes, sir.
Yes, please. Yes, sir.
Number 2. So what you do is that when you get the terms after the right issue, you just go and multiply by the total number of shares after the right issue. Since they have already accounted for, any number of shares that you see there should be assumed to be the total number of shares after the right issue. Number 2. Calculate the right issue amount. Then number 3. After calculating the right issue amount, this is what you do. Deduct from, okay. In Ghana, there's nothing like share premium, but outside person, there will be share premium. I'm gonna pick your money if you more. I'm gonna but they will tell you that they are training you to be a global accountant, not only Ghana accountant. Well, ideally, any question that you said must not go against the Companies Act. Is that not it? Or you disagree with me?
I agree with you.
But you agree that some of your questions there is share premium, which is against the Companies Act. The Companies Act supersedes the IFRS.
Okay.
Calculate the right issue amount. The right issue amount, if there is share premium, then deduct from share capital, an amount that is equal to the right shares. The right shares times what? Times the nominal value, right? Then you do the same to the premium. Deduct from premium. Deduct from share premium, an amount that is equal to the right shares times any value below or in excess of times value below or in excess of the nominal value. I hope you understand this. Do you understand?
Yes, sir. Yes, sir.
Assuming the right issue amount is 1.35 and the nominal value is 1 cedi, and you calculated the number of shares to be 10,000, then this what happens. It's just going to be share capital, the share capital amount minus 10,000 times 1 cedi. Is that not it?
Yeah.
Yes, sir.
Then the share premium, it will be minus 0.35 times
0.35 times 10,000.
Times 10,000. I hope you understand that.
Yes, sir.
Okay. Oh. You didn't buy my share. And if it to know what's Brianna. Okay, I'll leave it like that. Okay, Cephas. I had it.
Oh. Maybe he's not even aware he's doing this. So.
Oh, I will not clean it. They said a Regina said in a chassis. No, be spy. And now, ni for two. So let them do it. I don't mind them. They are, if really they are following what we are learning, they will know that somebody is doing this on the board. You let's continue.
Yeah, I think so. Yeah,
no
and more than moment in no amount of excuse the mama my. So the next thing to do.
The things are good.
Aswane yezin. We am quiet. I don't know what you teach to my mom. Okay. After deducting it, what do? You add it back again. You are deducting from the balance buffer, then you add it back. If there is a share premium, deduct from share capital, deduct from this. Deduct from I want to say deduct from share capital, balance brought forward is very important. This one to balance brought forward. Okay. After that, add back to both share capital and premium. If any. Do you understand?
So I don't get why we are adding it back. If you can please explain that side.
It's like this. Share premium, okay. So after the calculation, you have your balance before it, right? You calculate, then bring it here. You calculate, you deduct and bring it here. Do you get it? You see, if you don't treat the right issue, the account will balance. They are saying they have treated it. We just want to show it as a line item for people to see that this is the right issue. That's why we are doing that. Do you understand?
Yes, sir.
They say they have treated it. It means they have added it already. We want to take it back. Then we show it as a line item for people to know that this is the effect of the right issue. We just want to show the right issue as a line item. That's all. Do you understand? Yes, so we write here, let's say, at the right issue. Then we add. I not say about I'm sure I'm then we add.
Oh,
I get in it. After deducting from the blank for you just add back. So all these will be marked. All these share premium as a header will be marked. Share capital will be marked. The presentation currency, one of them will be marked. When you add the other calculation, before you realize you have between 10 and 15 ticks. Free only on right issue. Gloria Nana too, so on so by Shannon de Ase. Such a person, I don't think she's following. Yes, I'm a friend saying.
Gloria.
No, no, Gloria is here.
Safe as.
Yeah, safe as, yes. Safe as. I think I'll be a very good person to take it to remove him. I don't think he's following the class. I'll be getting it. So we are just now, yes, sir, and get careful. Let me look for him and take him out. I will take him to waiting list. What do you think?
So you see me apologizing there.
At where?
It's Gloria who is apologizing.
Okay.
Self-as Galaxy. Messi Ohunya, because why did he suddenly mute his mic? Self-as.
He must be punished.
Just because he's even mute to cry on mute to go and film me. I'm finding him waiting list on your serious. Waiting room. Uncle Train or I'm a unique waiting room dada. My yaman. See, I mean, is answer no. Yeah, class be am in the waiting room.
I think you have to take action for once.
So obaya minim dwuma obebedi nti. Okay, let's continue. So let's take something like the last one, that's the tax, right?
Yes, tax expense.
We have the current tax. Henry Barriga, your hand is up.
With the right issue, I'm not too clear. Please, in what circumstances do you define the new winter because they get the number of shares? In what circumstances?
You said, and what circumstances can you do what?
They say 1 for 3 or 1 for 4. Then you know you are dividing the new winter by the denominator times the number of shares. But this one, I don't know. I don't get it. One.
Sina, I also don't get you. Ukasano, damn now your base. That's the only thing I hear. I don't understand.
I'm saying my question in the chat board, but it's not.
But you'll be fine. So we have the current tax provision. Then you add under under provision. Do we add or we deduct?
We add.
We add.
Over provision.
We deduct.
Then we come to deferred tax. Anything. Increase or decrease. Increase or decrease in deferred tax. Okay, let me check the pointer of my pen. I think it's okay. So let's now take advantage of this deferred tax thing. Okay. So let's see. How will I do it? How will I do it? Okay. Decrease. Deferred tax. Assets. Liability. Once it's a deferred tax asset, once it increases, it's a gain, right? If it decreases, it's a loss. Is that not it?
Yeah.
Once it's a liability, if it increases, it's a loss. Then if it decreases, it's a gain. True or false?
True.
True.
Okay. The tax expense, as you see there, is expense. So if it's a gain, they need to deduct. I hope you are there.
Yeah.
Yes, sir.
No, Uncle Robert, please come again. The tax what? Expense.
Tax expense is an expenditure. So if
Yes,
you are
of course.
adjusting a gain to an expense, you need to deduct.
Yes.
Once it's a gain, deduct. Loss. Once it's a loss, you do what? You add. Is that not it?
Yes, sir.
Yes.
Apart from these three things,
Yes, sir.
there's nothing that will be added to tax expense in your exam. You should know how to treat this thing. Tax expense, constant. Okay, note last one on what is tax? What is tax? Part no solve tax nego. What is right issue? No solve go. Before you realize, now why when you note in baby, would they be you are done. Okay, we are now ready to solve questions. Hey, 119. Okay. Let me minimize so that you take your picture.
So with this thing there, this picture, you can't see anything.
You see, me some crowd about two baby are there no one palm.
Uncle Robert.
Say so.
Uncle Robert.
Yes.
You clean it for us, eh?
But somebody can clean.
So
I think he has apologized on that.
He has apologized on the WhatsApp page.
He said he was asleep then, so.
He was asleep.
Yeah.
How did he know that I've removed him?
Oh, sorry.
Uncle Robert, wabre. Maybe you are used to it, and that from Uncle Robert, I was about asking a question. Can there be an instance or a question where all what you've treated, the adjustment, will be part of the note?
No, the sales adjustment, only one of them will be part, always.
Okay.
But the rest,
okay.
Bonus is right, is only one of them.
Only
the rest
one.
is standard. I will give you certain areas that you should concentrate for the notes. Always they dance around that. So I'll look at that.
So with 11 takes to 14 takes with the right issue. And Robert.
Yes.
Yeah, so those takes are around the calculation of the right issue using the terms after the right issue, and then the calculation of the right issue amount, that is dividing them between the share capital and then the share premium. Just those two.
Yes,
and then
it's almost 14 to 15 takes. Yeah.
Okay, thank you.
Okay. Have you taken the snapshot? Please, have you taken the shot?
Yes, sir.
Okay.
Yes, sir.
So we have common standards in the final account. Number one is the IS-12 that I've just indicated. Number two is financial instruments. Financial instrument, that is IAS 32, Etaba Power, IFRS 9. Investment property at fair value. Investment property at fair value. One key when I need some energy and also they be about revaluations, PPE. So also what you are supposed to do. So 1, 2, 3, 4. If you add it to the sales adjustment, so at least 3 or 4. I have better. So can concentrate on only the time notes no plus or travel no. Yeah, yes, I baby mom coming. The first thing I will do, make sure I don't forget. I also do it in the intervention, but I think you should have it first. I will have to teach you how to hunt for maths in the final account. Before I pick a question, I'll pick the question, then I'll show you within 5 or 7 minutes how you should score as many ticks as you can. That is so that when they say 15 minutes more, it means look for 50 marks wherever they are situated.
Yeah.
I hope you are there.
Yes, sir.
Yes,
Yes, sir.
yes,
Yes, sir.
we will
Very
remind you.
important. This one I will not forget.
It's 125. Let's come at 2 and solve questions. But I'll be okay by you.
Yeah,
that'll be fine.
Exactly. Once we are a bit faster, we can solve.
Are we breaking again?
Yes.
I'm okay. If you think we should continue.
Yes, sir, please, we need a break. We need it.
Everyone, because it's more of no calculation, it has become boring or something. Yeah, so don't go and eat bangkong. This not for bangkong. Okay, so you take your last break. You come at 2. Exactly 2. Then we solve some final account questions. I think minimum we can solve 2. If you're able to solve 3, fine. All right. Thank you.
Thank you too.
That will mean I have to schedule an evening class 1 or 2 for the cash flow. Bear with me.
Sir. No problem. No problem.
All right.
No problem.
Thank you.
Thank you.
So I'll label this one final account part 1.
Okay.
Okay.